Gold Invest. Explore opportunity.
We're here at the biggest mining show in the world, the PDAC 2025 in Toronto. We're here with Peter, how do I spell it? Krauth, and like the German.
You got it, exactly.
Okay. Peter Krauth, precious metals expert and author of The Great Silver Bull.
Correct.
And well, we want to talk about silver. Silver's had a run already, like from 24 in the dollars, but we're thereabouts to over 30. Now we're at 31, 32,
That's
somewhere
right.
around there.
Exactly.
So what were the key factors in that? What do you think?
I think that, as you said, late February last year, we were around 22, 24. By October, we had run up to 35, like a 40% run up in the metal itself, which is tremendous. And now we've dialed back a little bit, not too surprisingly. That was very quick. And so the market's digesting the gains, I think. But I think that the market is starting to realize that it's a very tight market. Silver has 4 years in a row run deficits. So the basic simple numbers are that there's about 1 billion ounces of silver supply every year. 850 or so million ounces come from mining, and about 150 million come from recycling. However, the demand is at 1.2 billion ounces.
Okay.
So we're short roughly year in, year out about 200 million ounces. It's about 20% of demand is not being met by new supply. So I think the market has started to realize that this can only go on so long. The way the market demand has been met is that the big industrial consumers have gone to what we call secondary inventories that are sitting on the exchanges like the Shanghai, the LBMA, the COMEX in New York, and they have a few billion ounces sitting there. The big consumers can go buy these long futures contracts, and when they come to maturity, ask for delivery. Now, Shanghai is meant for that. LBMA and COMEX are not so much meant for delivery. It's more, to have supply to back some of the contracts. But that's not how they're being used right now. They're actually being used very much to to take delivery. I think also that one other way that they've been able to manage is to buy physically backed silver ETFs. It's not so much for a retail investor, but if you own enough of because of the minimums required, but if you own enough of certain silver ETFs, you can ask for the silver in exchange.
Yes.
You can turn in your units and say, I want the physical silver that backs these. So that's another way that they can get their hands on large amounts of silver. And these inventories have been drawn down.
That's not going to last forever.
Exactly. We're down something like on average 40 to 50% in these multi-billion ounce inventories over the last 4 years or so. Again, this can only last so long. The Silver Institute thinks that we are, over the next 5 years, not only going to continue with deficits, but that we're going to hit new record deficits at some point in the next 5 years. So it's looking very, very bullish for the silver market and the silver price.
Okay. But of course, the silver has this bigger brother, gold.
That's right.
My gold has been going up, so it's not surprising that the silver goes a ton. But somehow the disconnect there is not really decreasing that much.
That's true.
If at all.
You're right, exactly. So there's the gold-silver ratio, which if at any point in time you look at the silver price, you divide the gold price by the silver price, and it tells you how many silver ounces you need to buy 1 gold ounce. And the ratio is historically quite high right now at 92 times almost. And if you look at the last 40, 50 years, the average has been more about 55 or 60. At some point, we're going to see this ratio start to come down. I think the market always looks at gold first. Gold is the king of precious metals, and it's the ultimate hedge and so on. And we've seen gold rise a lot. The mining shares have not kept up. And I think one of the big explanations for that is that a lot of the buying has been from central banks. Yes. It's been incredible. The last 3 years, it's been about 1 out of every 4 ounces, gold ounces, was bought by a central bank. Yes. So 25% of the annual supply. Just crazy numbers. They buy gold, they don't buy mining shares.
Yeah.
So
do they buy silver?
Well, I don't think so. Not really. No. It's a very, very small market. It used to be maybe 50 years ago, a few central banks or national banks would hold some silver, but that's really not so much the case. It's not as far as we know. And so they buy gold. They don't buy silver. And people have been buying gold a lot. We certainly see that. I think that if, when we get to something like a psychologically important number, let's say like 3,000 or even beyond that in gold, which is really not far away, it's a few percent at this point, that people we're going to see a lot of headlines for gold at 3,000. And people will start to pay attention and say, maybe I should own some gold. 3,000 is looking a little expensive. I just get 1 ounce for $3,000.
Yeah.
What else can I buy? And then silver is the natural alternative to that.
Yes.
And so we could see, the industrial demand for silver is very, very steady, and it's rising.
That's because of the solar sector, for
Especially.
example, especially.
Which takes now 20% of all the industrial demand. It's only solar. It was half of what it was 10 years ago, and it's just doubled in that time. It's tremendous. I think that the market's going to see this. They're going to start to turn towards silver when they see that it's certainly quite undervalued. And because now industrial demand has actually gone from about 50%, the silver market is normally traditionally about half industrial, half investment. And in investment, I consider buying, silver coins and bars. But I also put jewelry and silverware together to do the investment side, which is about half. Well, that 50% has shrunk to about 40% because industrial demand has moved up to 60%. So the way I look at it is the investment demand it ebbs and flows. So it's not as constant as industrial demand. But when investment demand comes back in a big way, and it does every, year or couple of years, then what's interesting now is that there's less silver available for the investment side because industrial is consuming more and more of it.
Yes.
So if you have less silver available for investment, and investment comes back in a big way, it's just going to squeeze the price even harder and push it up faster.
Okay,
so I think we can look forward to another silver squeeze at some point, but it may be more sustained this time.
Okay, hopefully. But
Right.
where do you see it? Do you see it just around the corner? Is it a mere middle, long-term play?
I mean, what I've been thinking is that this year we saw 35 in October last year. I think we could see 35 again, perhaps by mid-year this year. And then I think in the second half of this year, we could see $40 in silver. And, given how silver has behaved in the past, I was just watching a very interesting talk by Tavi Costa of Crest Capital. He does fantastic research. And he was saying, to the way silver moves sometimes, to see a quarterly close in silver, at say $37 would be totally like a non-shocker. You could certainly see that happening, and within a matter of the next quarter or two, it could easily happen. Just the way silver moves and how tight the market is. Again, I mean, I'm being maybe a little bit more conservative, but I think that 35 is realistic by mid-year, and then 40 perhaps by the end of the year. And if you look at how this I'm not a technical analyst, but I do follow it a little bit. And we have this very, very long-term technical chart where you have this $50 silver peak back in 1980, and then back to 50 in 2011. Then we have this sort of handle formation. If some technical analysts consider this would be one of the biggest technical breakouts in modern history in any asset.
Okay.
For silver to reach $50 again at some point. And if you look at the timeline and how it's played out, I could see it potentially happening maybe next year. So, yeah.
Well, that certainly would float a few boats in the sector.
It sure would.
The rising tide there.
Exactly.
But that brings us to the next question. We briefly touched about it, that in the gold companies or the gold juniors, let's say, developers, explorers haven't been profiting from such there's always different strategies and people at different stages, so they react differently to the rising prices.
Right.
Some producers in the gold space deliver good numbers, which goes a long way now. With the investors have been waiting for that a while.
Exactly.
There's not that many primary silver producers around there, so
that is true.
That's a problem with the silver. Is almost always a byproduct.
Exactly.
So what do you think needs to happen for the silver stocks to sort of follow, at least in a way, the silver price?
Well, an interesting statistic that I have for gold stocks is that if you were to look at the gold stocks on the S&P, if you would put them together and sort of form an index of them, they'd be the single most profitable subsector of the S&P. They have 40% free cash flow today. It's just off the charts, and the general investor does not see this, does not realize, but they're cash machines right now. And so I believe that we're going to see a lot more M&A start to happen in gold. We've started to see it in silver. I said about a year ago that we would start to see that happen in silver, and we had two big deals the end of late last year. We had First Majestic bought Gatos Silver. We had Kerr Mining bought Silvercrest. And there's more of that to come. But like you say, the silver space is so small that I think we'll start to see that move down the food chain a little bit. We're going to start to see there's only so many other producers to acquire.
Yeah.
And especially if you want to kind of stay silver rich. So I think what you're going to start to see is that they're going to, especially companies that, let's say, get their permits and have become very de-risked, you're going to see some of the bigger producers say, this is still quite cheap. I have very little risk left. I need to keep replacing my depleting reserves. I'm going to start buying now, and I'm going to buy these larger, rich silver projects that maybe are a year, 2 years away from production. And it's a lot to swallow because they have to finance that and they have to go to the market and so on. But I see that starting to happen. That's I think where that's going to be the impetus to start getting this moving.
Well, let's hope it's not too far away.
Right.
Talking about silver stocks, let's talk about a company we both have been telling the story of, which is Cerro de Pasco Resources. They're in Peru, and they've got a very special project. I think is that what attracted your interest?
It is, and the amount of silver. So this is considered the largest or one of the world's largest above ground metals resources. It's something like, I think, 400 million tons of ore. They're looking at about, I think it's 26% of that is silver. These are conservative numbers because I don't remember the exact price that they used for silver, but it was not the spot price. And if you start using the spot prices, then I mean it's incredible. And then they have other metals like gallium, for example, which is a critical metal. China has just said that they were going to stop exporting that. Kind of part of the trade war with the U.S. This is a critical metal. It's used in a lot of military applications, for example, and so and tech and so on. So that apparently the gallium is worth as much or more as the silver in their resource. It's just amazing. So that's one that I think people need to watch very closely if they follow this space at all. Eric Sprott is a very, very big investor.
Yeah, I just saw a statistic. I didn't check it, but it says it's one of these largest positions of the last years.
And he's been buying and building his position. He thinks that, I just saw him speak actually this morning at PDAC, and obviously he's a long-term investor. He's very patient, and he said several times, he said, be patient. Have the willingness to think big, but be patient. Give these stories a chance to play out. And he said, I've had a lot more losers than I've had winners. But my winners some of them have been so big, they've many times compensated over for the losers. And he thinks Cerro de Pasco could be as much as a 400 bagger. It's just off the charts.
Okay. Thank you very much. Thank you for taking the time. Pleasure. And hopefully it plays out the way we talked.
Certainly. Thank you very much
for talking to you.